Welcome to the latest Motley Fool scoreboard. I'm on in Chalk Balloon. We've got longtime fools, Dan Caplinger and Jason Hall, giving a 1 to 10 rating to gold. Like Bitcoin before it doesn't fit perfectly into our categories, but Jason and Dan can handle it, and they're going to do a great job. We're going to talk about the strength of gold's business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Dan's at a 9. Jason, you're at a 6.
Gold is good at being gold, and Dan will talk about that, but it's people who have built businesses around it. And as much as gold is having a market-beating moment right now as a long-term asset, it just hasn't matched owning businesses through the stock market. I think as an unallocated asset to offer some diversification, sure, gold is fine and it's interesting, but I'm not sure I call it a superior asset most of the time. Where it has been a pretty solid asset is one that's less volatile than stocks and has generated better returns than bonds, except when it hasn't been a great asset. I'll break that down when we talk about performance and safety.
You know, I gave it a 9. There aren't very many businesses that have been around doing what they do for 4,000 or 5,000 years. That's what gold has been doing. Chemical element number 79. 79 protons together, making a pretty yellow metal that gets used in jewelry, in industry, increasingly in finance. Everything that you said, Jason, I would agree with in terms of business, but go tell that to the Chinese central bank and to a whole bunch of other big institutions around the world, and they may disagree with you about the relative value that gold has.
Yeah, gold might not have a ticker symbol, but it's got a symbol on the periodic table of elements at AU. And also, it does that diversification that Jason talked about, and just being a physical thing, which, you know, you can't hack gold. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Dan's at an 8. Jason, you're at a 6.
Yeah, and again, I'm really going to focus on a lot of these gold-focused businesses out there. They've often leaned into FUD, fear, uncertainty, and doubt. Marketing gold is a better, safer investment in a world of high inflation and stock market bubbles. And again, gold's certainly been a great asset to own in recent years, but its long-term track record hasn't always delivered on the expectations of those who sell the story and then just profit from investors who pile in.
I'm more charitable with my score, just in part because, again, if you're owning gold for the reason that you have for it, it's kind of hard to goof it up. I mean, it is what it is. Management fees, you know, you take possession of the gold. It's a little bit of take some care. You have to go find a safe deposit box or someplace to protect it from theft, protect it from damage. As Anand said, you may not be able to hack it, but yeah, there is some counterfeit risk out there. But other than that, it's kind of what you see is what you get, which I can't say the same thing for a whole bunch of businesses out there where it really takes a deep dive into SEC documents and other disclosures to try to figure out what the heck is going on with the business.
That's right. When you don't do much, it doesn't take long to study your business. For financials, a 10 is a fortress, a 1 is yikes. Dan's at a 7. Jason, once again, is lower at a 4.
Yeah, again, gold has been on this incredible run as people fear the growing debt and dysfunction of the U.S. government, threatening the dollar's role as the world's reserve currency. Here's the problem. Gold does have financial realities, and I don't think that the fears are necessarily backing up the valuation today. We've seen so much investor speculation moving gold's price well above the floor that is held up in terms of demand by industrial and commercial demand. And I think that does mean that the business model and the financials of gold are certainly less compelling right now than they would have been a few years ago.
So it's interesting, Jason. I don't think I disagree with any of that, but when I evaluate financials, often it's a backward-looking calculation. And so having seen the performance of gold recently, that is a plus for me, whereas it's kind of a minus for your score. That's where my 7 is coming from. And again, I'm not saying sell every stock that you have and buy a bunch of gold. If you understand what gold's purchase is in a portfolio for diversification, maybe for some of these more extreme event insurance, then I think it gets the job done reasonably well. There is speculation, though, and that is part of what you're buying, and so you have to be aware of that and take it into account. We're about to talk about valuation. That's where I incorporated into it.
Yeah, let's talk about how gold will do over the next 5 years and how safe it is. 10's a sure thing. 1's a lottery ticket, Dan.
So I've given it a 0 to 5% rating, which is below what I'm expecting the stock market to do over the next 5 years, with a safety score of 4. And it's exactly the reason Jason just said. I mean, we've seen a huge move in gold already. On the day that we're taping this, gold just moved over $4,000 an ounce for the first time. And so don't get me wrong. I mean, a 5% return over the next 5 years would mean a price between $5,000 and $6,000 an ounce by 2030. I think there's a chance that speculation pushes it above that, but I think we could also be in another one of the situations we've seen historically where you get a big spike and then you get an equally abrupt downturn from that peak.
Yeah. So again, same return profile as Dan. My safety score literally only went to 3.5 because I wanted to reflect that I think it's less safe than Dan does. And I'm gonna tell the story of why. If we look at 1996 to 2003, gold peaked in 96. It wasn't until early 2003 the gold recovered to that previous peak. It was up about 8%. That's less than 1% a year. And it was down for that period, about 80% of that time, it was down more than 20%. Fast forward to late 2011, gold peaked again. And you've got to go more than 9 years before it recovered to that peak price in 2011. It was down more than 20% most of that time. And at the bottom, it was down 40%. So gold's image, safe, uncorrelated assets, frankly, it can be misleading when it's at a peak fear-driven price. And I have some concern that we're approaching that right now. Now, that doesn't make it unbuyable, but this is what Dan was talking about earlier. Thinking about position sizing and the role of this asset, what are you trying to accomplish with it? Because if you're buying it just to try to do really well and make a ton of money, that's when messed up expectations lead to one of those 2011 to 2019 periods.
Thank you to both Jason and to Dan. They've given gold a low overall score of 5.4 out of 10. Jason prefers Bitcoin in a top it because it's easier to own with lower fees and quicker to turn it into money. Dan prefers platinum at a half to a third of the price. That blows my mind. I've always thought of platinum is more expensive than gold historically, right? You have the golden rule and the platinum rule. I guess we got to change that maybe temporarily. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is the number one stock I tell friends and family to buy. Till then, full on. You talking Bleecker Street over Grimaldi's? Forget about it.